Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots for the markets today, Thursday, April 28th. My name is Todd Rich. I'm with Nadex. Joining me, Brian Caprice from Keep Trading Simple. We have some volatility going on in the markets today. One, we are going to talk about natural gas because there's some news around natural gas and there's been some volatility and movement there. Two, we are going to talk a little bit about currencies. We're seeing that the yen is just getting smashed. Yen weakness, and it's hitting some pretty extreme levels. We will be taking a look at that. And then really the story of the day, I'm kind of buried the lead a little bit. We are going to look at equities. Equities are trying to open in the green. And we did just get a couple of very big economic numbers. We did get our advanced GDP as well as the look at CPI. And it's not pretty. The U.S. economy is contracting. We were expecting to expand at just over 1%. We actually shrank at 1.4%. We haven't seen a contraction in the U.S. economy since the beginning of the pandemic. We've been coming out of the pandemic. That's all been coming back. And here we go. Boom. This is where the rubber meets the road. And we are seeing a contraction in the economy and prices still going through the roof with the CPI, the advanced CPI at 8%. Going to force the Fed's hand. They're going to have to do something, but we do have equities moving. And in the background with equities, we've got earnings going on. And this is where it's going to get kind of fun, is it's going to be push and pull. Earnings from some mega cap companies, they're blowing out earnings. They're blowing out earnings. And so you see those stocks going up. And we're also going to see some pre-positioning because we've got some big tech earnings today. Apple and Amazon will both be announcing today. But we got Facebook announced yesterday, stocks going through the roof. McDonald's beat revenues. I mean, it's this real mixed bag of pick and choose when it comes to equities, but collectively we're going to be analyzing the indices. All right, before we get it, that's kind of the whole tee up. A lot to discuss. So, Brian, we're going to have to move quickly through it today. But before we do that, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So let's get at it. We've got nat gas, we've got yen, and we've got equities. And there's a lot to each one of those.
Mm-hmm. Yeah, I mean, I think the biggest news is, obviously this has been something that's been going on for the last 2-3 weeks. The yen talking about weak, and then it was like 130 was the major number, and then somebody said, yeah, in reality, 130 to 135 is really not going to make much of a difference either way. Some very poignant comments, and yesterday, they basically said the fight against deflation is a lot harder than we think. Remember, their economy runs differently. It's been and actually I did check. It is 3 decades now. Remember Abe, the liberal Democrat guy? Abe was in charge and they're running Abe. It's 3 decades of stagflation where they've done nothing. But whenever you make comments to this at their BOC meeting, or no, their BOJ meeting, they clearly indicate that it is not ready to end its easing policy as its inflation target is still really far away, which is the exact opposite of what we're seeing here. And what he said was, and again, these are the bullet points, was that the Japanese economy is advancing up as a trend, which again, that's positive, right? We won't hesitate for easy further if necessary. I believe 2% inflation will not last. It is appropriate to maintain easing. Japan is not in a situation to raise interest rates like Western countries, as Japan hasn't recovered to pre-pandemic levels. Remember, they were in a pre-pandemic stagflation and then went down. So they're not even back up to where they were before, which really wasn't even in growth. It was just maintaining that low environment. So everything we've heard over the last kind of week or 2 weeks, it's kind of like, hey, we're weak. And then all the strength kind of rolled into it as everybody got used to it. And they're like, no, we're not raising. There's no point. It's a different scenario. We have to keep it weak. And because of it, it doesn't matter which one we look at, whether it be the dollar yen is up 177 or the pound yen, which is up 222. This is what we're looking at in a chart, right? I guess the dollar yen is the one that matters the most.
Yeah.
At this point, we have now gone through the 130 mark, right?
Woo!
Yeah. Yeah. And again, those are those big. I'll remove all these now.
And we said,
Those are those.
we had
There was that
called,
big number.
we had said that what they had said that 130 is the number, and they can handle it, but that's when they would step in, and then now it's there, and they've kind of changed their tune. Maybe not 130, 135,
Yeah.
135.
Yeah, well, yeah, that's what they said. They said, 130 would be considered weak, but then they're looking at their actual inflation targets. Like, you know what? Maybe it's not. So and it's funny, you pull the 130 here, and it's like, well, wait a second, where's that other level at? Like, how far away is that? It's all the way up here. I mean, they just said, hey, listen, we're going to maintain, this weak, the weak policy. We're not like the West, and look how hard it was for us to break through the 130 with all this talk. It got close, pulled back. It was like, oh god, 128, 128. Oh, we started to get all the strength, and it's like, no, we're weak, guys, come on. It's almost like they're trying to raise it. Again, remember, this low yen is good for them because exports is great. And this was the issue where they were like, oh god, China doing all this stuff. China's starting to take our business here because their currency is weak. Japan's already been accepted as this counter currency. Now, this is awesome. I mean, I'm excited about this. Again, breaking through the 130, it's there, it's gone. I mean, we got a lot of room to higher to get even weaker. I mean, at this point, with everybody raising, it's kind of like, how much more weak could they make it? What was the question?
Yeah, I was gonna say, how far back do we have to go to even see the yen at levels like this?
It's actually not as far. I mean, it's 10. It's right here.
There it is.
02, February of 02.
Okay, yeah, so 20 years ago, and
hey,
we've had,
and look where the orange line just happened to go to.
Yeah.
The 135 number just happened to go to where the last time we saw sellers. So
yeah,
it's these numbers are not just arbitrarily like, oh, we're going to use 130, 135. Why? Because they are quarter theory based numbers. You can see that that's actually where the sellers are. So I mean, even on a monthly chart, I literally threw that 135 as a reference to show you guys on the 30-minute how far apart they were. And on monthly, look at that. That's where sellers stepped in last time.
20 years ago.
Showing us that there's a zone right there where we have sellers on a monthly basis, which again is a pretty big size chart. So, it's kind of crazy. And it's funny because back in 2002, that's when I was first starting to look at currency. So, when you see these lower prices, like, I'm kind of used to these numbers and the 230s in the pound yen. So,
going back in time.
It's funny. It's like, it's kind of like what they say about diapers, right? You start your life in diapers, you end your life in diapers. It's kind of the same thing.
I love
the
it.
price of the yen, it started at 133 and we're, ending over here at 133. So, yeah, it is a big deal. But again, why it's exciting for me as a currencies trader is they are maintaining this kind of weak status. Okay. We know everywhere else, and we'll look at today's data. I hate to say I told you so. I hate to say that Bernard told you so. I hate to say that, Jamie Dimon told you so. But this is what it is. We are now at 8%. Yeah. Right? We were at 7.2 before. It is getting worse. The advanced GDP numbers. So now the economy is contracting. The price index is getting higher. So we're spending more for things and we're starting to contract. This is kind of that scenario where the stagflation becomes a major problem for an economy. And everybody, again, this is very difficult going into a fall. I mean, yeah, it's not fall yet. We're just getting in the summer. But this is the scenario. You just put a guy in and a girl in that both believe in the same thing. Remember, Bernard just was, she was all excited. She's like, look, see, it's working. The core is down. This is great. It shows that she is also not in touch with what reality truly is. The president's approval rating is as low as it's been through his entire presidency. The biggest concern for everybody right now is inflation, the way that the economy is being handled. And I think he has like a 35% approval rating, or actually maybe even be lower. I think his overall is 41 and is based off the economy on both sides of the aisle. I think it's at like 31. It's very, very bad. People vote with their wallets. And now the person that you just put in and his vice president both believe what they have is working, and the scenario is getting worse. Now, people are, unemployment claims they're holding firm, meaning people are working, but we are absorbing all of this, and it's hurting a majority of the population right now. It's getting worse. It's getting worse. So we know that we're going to raise. What this has to do with Japan is the carry trade. Again, I keep mentioning, but the carry trade gets more and more exciting. And again, we haven't been able to trade it for a couple of years now. Really, with it's not a low interest rate scenario, but right now they're talking about 2.5%, maybe 3%, and the United States is not even the one that drives it the most. It'll be probably the pound and maybe the Aussie, New Zealand. It could be like a 4% interest rate. Yeah, they're raising faster than we are, but if the yen is not going to raise and they're going to stay at zero, just by holding the currency, you could make 4% on your money. Show me where you're getting 4% anywhere else. And again, this is where
Yeah, I was just
But
gonna say, for anyone who's not familiar, I mean, when you're trading those currencies, there is an adjustment every single night for an annualized number down to a day, where
yep,
the currency you own, if you're collecting 4%, you'll get
mhm,
your 4%, but then you have to pay on the one that you're short. And if it's the yen and it's
0.1,
zero,
point
you
one.
pay.
Yep.
What if it's negative? Do they actually pay you on both sides?
Yeah, no, they don't pay you to borrow money, unfortunately. That's the big fallacy of negative interest rates. Are they paying me to take money? No, they're not. That's not how it works.
It doesn't
Um,
work that way, but you're not paying anything. So you're going to
yeah,
collect every night. There's going to be that little piece that you get every
yep,
single night on the one that you're long, and if you're paying nothing
yep,
on the one you're short, yeah, that's real.
yep.
That's real returns.
Yep, and here's why. When you're thinking about places to put your money in this environment, bonds is typically where rich people put their money because it's guaranteed and things like that. But right now, you're getting no return on it. Bonds are going lower, 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 lower. As interest rates rise, the bond prices will continue to go down, and it doesn't become as attractive. Then it's like, oh, well, just put yourself in cash. Well, this is why you don't use Bitcoin for large amounts of money because you don't get anything for it, right? Holding cash, you also get nothing for it. So this is what happens is you all of a sudden see an absolutely enormous expansion back into the currency market. I mean, it's already like a 5. I think it's down like 5.25, 5.2 trillion every single day. It's like 100 times bigger than the overall stock market. But now, when people need a place to put their money, large banks and institutions, this thing called float. Like if you have a company, they take money from your account and then they pay your employees 3 days later. That's how they make their money. It's called float. Now that they can use the currency market to make 4% on their money,
In those 3 days.
that's that. Yeah, they're using your money to make 4% return in a couple days, and you're just like, yeah, it's just normal. That's just what happens.
Yeah.
This is how large banks and institutions make money. So again, awesome opportunity in the markets. But right now, as far as what's tradable today, again, we are seeing dollar strength across the board, so you definitely need to watch out for that. Again, we haven't, we're right there. We were at 103.93. We're almost at 104. I don't think I've ever seen 104 in this one. I don't think the chart for the Dixie goes back far enough. I've never seen it this strong before. But what they're saying, what they're looking at right now, and again, this is kind of pre-positioning. Remember we talked yesterday about we're seeing all this dollar strength, but they haven't done anything yet. It's in preparation for it. This is
Yep.
buy the rumor, sell the news. If they come in at 0.5, this thing could just tank suddenly. Like, why is it going down? They just raise interest because the big money has already positioned itself. It's been playing this like, oh, these numbers are going to be, they got to raise, right? And again,
The only
remember,
thing that would, yeah, the only 0.75 might.
yeah, pal, 0.5 is on the table. Really? I think it meant to say 0.75. Like Bullard said before, the 0.75 needs to be on the table. Because I'll tell you right now, if this continues, every month this continues, more and more votes now are going to the other side of the aisle because of the disappointment of what we're seeing. And again, it'll be another monumental swing back and forth again. Then everybody that's upset with all the current policies, they can go back to this. Again, this is how, the economy really drives, where votes go. And this is a huge deal. And,
Yep.
we did get some relief. There is this as well. And again, I've been joking about this, that I love
Yeah,
it.
the
Now it's
nat
called
gas.
gas blackmail.
Yeah.
Yeah, it's gas blackmail now. No, it's not. They told you what was going to happen if you didn't do it. Like any utility bill, if you don't pay it, they cut it off. If you don't let them use dollars, they're obviously not going to accept payment in dollars. That's the dumbest thing ever. So it's great that Europe loves this, but you know what? EU energy groups are preparing to meet Putin terms for Russian gas. As they should. You can't cut him off from a financial system and then expect to pay him for his commodities in that system. That's absolutely stupid. So again, Putin is doing what he should be doing. So, but it is giving us a relief in natural gas. Natural gas is now down to 1.9%. It didn't, I mean, I love this. It got so close. We missed it by just a little bit. I missed it by 4 cents. People are like, how did you know? I didn't know. And actually, in reality, if I would have taken this through the whole kind of basing level, you can see how I missed it by 1.5 pennies. Missed it by 1.5 pennies. So I got close, but it is giving us finally some relief to the downside because there's not going to be that energy cutoff. They're going to say all the same things. Oh, we're going to cut Russian gas off. We don't need Russian gas. Yeah, you're right. You don't have to have it, but on the same time, he doesn't have to give it to you either. So right now, I would say that this will probably continue to deteriorate a little bit more. I would say that buyers are probably going to step in, most likely down here. I mean, this has been a very big basing level and kind of a rally point. And again, this was an old sell level at 703. Right.
Yep.
I would say that this is probably the next area. This would be kind of our target to the downside on it, which would be awesome. And again, understand this is one part of it. Right now it's 40 degrees outside, and we're in May. We
And
have that
if you're
cold stuff that you had, Todd. So
yeah, it's funny, and it'll pass through. If you're looking for trade setups on this trade, um, take a look at the Nadex knockouts. There can be some interesting places in there where you might like the risk reward opportunity, but you'll have to go over there and check that out yourself. But the levels that Brian was just talking about it could be a compelling, interesting shot if you think nat gas is going to continue to go lower with, hey, if they've solved this supply problem in Europe and they're going to start paying in rubles, then the US gas, which was running higher because we were going to, in theory, be pulling some supply out to send it to Europe, and if they don't need to do that, that'll ease some of the supply challenges in the US. It'll bring the price of nat gas back down here. So something to consider.
yep. And then again, silver. We talked yesterday about a target of 23. You can see that our 20. This is where we were sitting yesterday. I said, hey, I still think we're getting 23 in the next day or so, especially with that advanced GDP. Yeah, we're at 23 right now. So again, both of these are red as you'd expect. Again, we kind of extended further down here, and you can see we didn't quite make it all the way back up to the 23.6. But same thing. The number today, not good for gold. Gold should continue. And again, we've been talking about this. Yesterday I mentioned that kind of week-long position, whether it be a binary, a call spread. I mean, you can see here's where we started the week right here. And again, this was a week we expected to see this news. Just like oil last week or 2 weeks ago, I was like, hey, this is a week-long position. Here's your gold position. I mean, gold and silver both continue to deteriorate down. So again, the question is now, it's, we're running out of time this week, but do we start drawing horizontal lines? Do we start talking about 22, which is all the way down here? It looks like it's really, really far away. But the reality is, I mean, it moved the dollar from here to here in a day and a half, 2 days. So if we start to base and stabilize and really start to put some sellers in, could your next week trade be down to 22? Remember, this is supposed to be at $100, and we're at $22 right now with a rising interest rate environment. So not great. Oil basically stabilized itself, so not much there. The indices right now, the VIX is down 5%. Again, knowing that Europe is not going to get cut off from energies is definitely something that lowers the VIX a lot. Everything right now is in the green. They are pulling back, which I'm okay with. You'll see right now, and again, let me drop these down to 15-minute candles. You're seeing that they're kind of trying to print some, printing a little bit of red in here. I would say watch the open. This is one of those days where I'd be very, very cautious. This was a trade from yesterday, and again, it's out now, so let's take it so we don't confuse people on it. I don't need this anymore. What I would say is watch this kind of level of basing. I'll just steal this one right here. Oops. I was going to try to steal it. Now it's not going to go with me. I would say watch this level of basing right here. We've seen a lot of basing, a lot of, over here we saw it, over here we saw it, over here we saw it. If price is able to pull back in the next 15 minutes, that area could be a launching point. Right down here at 42.13. And again, you look at this, you're like, this is horrible. But remember, bad is good, right? Everybody and their brother is going to be looking to short this right now because they're like, oh, this is so bad. They're raising interest rates. When everybody plays a reactionary move, you tend to have the opposite effect. So again, you got to look at this and say, oh my God, the inflation is bad. They got to raise interest rates. But when you look at the GDP, they're like, oh my God, they can't crash the market. The economy's, so this is that bad is good. There may actually be a buying opportunity now. In reality, if you take all, everything off the table and just look at it for what it is, it should absolutely crash the markets today. But again, right now the options market is showing us that volatility is down. We're not going to have the cutoff of Europe as far as gas goes. They are going to pay the prices. And again, the Fed may say we can't raise it too much.
And for the most part, I mean, with the exception of pockets here and there, earnings, companies are still making truckloads of money. And so you do get that dichotomy between
truckloads of money,
the
you sustain a recession.
Yeah, the economy versus the stock market, and they can be very different.
Yeah, they are. And another thing too is, this is just below the 23.6. Again, this is NQ. I think NQ is probably the place to be right now. Again, they don't have the supply chain shortages. The inflation is not nearly as bad over there. It is pulling back in the basing level that we had in the ES. You can see that. Actually, let's see. Can I get rid of that other one? Yeah, I can get rid of the other one. Let's get rid of that so you can see it better. This is a little bit of a pullback, and here's the basing level. Actually, it's a little bit lower. It's kind of more right there. We're at that same basic level I just talked about, the ES, that could be a buying opportunity, right? And again, it got pushed down right before the market opened from that news. Typically, you're going to look for the 23.6 as a momentum continuation. We know that we don't have a lot until all the way really up in this area. So we do have some room to run to the top side of this one. And again, magically, the Europeans are what turned this down and said, hey, listen, your data is going to be bad. So that tends to be a sign that we could potentially go up. So NQ could be a potential buy at the
And
open.
remember, with NQ, we do have Amazon and Apple earnings, and those are a couple of very, very large mega caps that.
How often does Apple miss? Right.
So just keep that in the back of your head too.
Yeah. So, and again, YM doesn't have the same level of basing. It's much lower, but I think this one also, again, with it contracting, I think for me today, YM will be the weakest, just because, again, if you're not spending as much, that again, it tends to hit the industrials. And then Russell currently right now is holding. I think it's probably, it's kind of flirting around with it. It does have a little bit lower is where the 50 is. So if these drop a little bit at the open, again, that would be where the trigger is. I would say right now, yesterday there was a heck of a bull trap in that one. Again, I would look for the same thing. If everybody shorts at the open, everybody's trying to short at the open, don't be surprised if it pops through. And then you'll have people that are looking at this and say, hey, listen, here's the Globex high. We just broke it. It's time for me to go long and then get a bit of a reversal today. So I think this morning will be right with reversals, particularly with, what radio station or internet website you go look at. Again, one of these numbers, oh my God, we're shrinking. This is horrible. And then the other side, it's like, well, wait a second. Not only was it hot, did they adjust it last time higher? It was even higher what the forecast was. So this is kind of a double with inflation. Fed, they're doing a bad job. So nowhere where to put it. So that's it for today, but a lot of movement out there. And again, interesting plays with the yen and currencies and commodities are all taking it on the chops today so far. Gold, silver dropping even lower. And again, I think you'll see a bunch of reversals coming in currencies. Probably not so much in the yen, but there will be profit taking. So there will be a pullback. And remember, they said 130 was the big thing, but now they're like, 135, we're good. So let it roll.
A lot for
things
today.
like dollar CAD barely moving. So
yep. A lot for today. All right, with that, any questions for Nadex, please email us, customerservice@nadex.com. Brian is also accessible. You can email Brian at support@keeptradingsimple.com. I am also available, todd.rich@nadex.com. There was a lot to discuss today. The big news was the U.S. economy contracting, our GDP coming in slightly negative when we were looking at it for a slightly positive number. We're also seeing CPI prices up 8%. And so with inflation, economy contracting, certainly a difficult scenario. But in the backdrop, we've got corporate earnings. For the most part, companies are doing really, really well. The other things that we're looking at that we covered today, nat gas, if the supply issue in Europe gets resolved because some of the European countries pay in rubles, it will ease some of the pressure on the nat gas prices here in the States. We were looking at the charts there for nat gas prices here, and the yen getting absolutely demolished. And we are seeing a little bit of some dollar strength in there as well. So a lot of things going on in the markets. Very busy day. Brian and I will be back tomorrow morning, and we will jump into it again and see how we are going to end this week. And as we come close to finishing April, maybe May will be a better month. If you like what we're doing, please give us a like wherever you're catching us, Facebook or YouTube. Brian and I appreciate that. We will catch you again tomorrow. Good luck in the markets until then.